You have been working very hard for months and months, creating hours and hours of content on your YouTube channel or your Twitch stream, and you finally started to make some money. Only then to realise the taxman wants you to pay over a sizable chunk of your hard-earned income. So in today's video, I want to go through all of the different tax deductions that you can use to bring down your tax bill. This video will hopefully serve as a guide for you, and maybe you will discover some expenses that you never claimed before. And just a quick disclaimer before we get going, even though I am an accountant, I am not your accountant, so you should not take this as financial advice. And also, even though the tax treatment of many different expenses is quite similar from country to country, it can vary, so you need to check out with your accountant the specific rules that apply to you in the country that you are tax resident. There may be some specific rules that you need to be aware of, so it is better off to talk to them as well. With that out of the way, now let's get straight into the video. The first tax deduction that I'm sure that everybody is already aware of is your equipment that you bought to create your videos, be it your camera, your laptop, or your sound equipment. You do have to be careful, however, surrounding the tax rules on equipment. Let's say you went out and bought a camera that was valued at €1,000. This camera would be treated as a capital expense. A capital expense would be anything that usually has a useful life of greater than 1 year. In most countries, you can't claim the full deduction for your capital expenses all in 1 year. It is normally spread over a lifetime of the asset. In Ireland, for example, you need to spread out your capital expenses over 8 years. So if you bought that camera for €1,000, you can claim 12.5% of the value of that camera every year for the 8 years. So you will get to claim a tax deduction of 125 in the first year, and so on until you have come up to the €1,000 value. So this rule varies from country to country, so make sure to check out with your local tax authority to see what the rule specific to you is. So I know in the US there is certain circumstances when you can claim the full amount of the deduction in the first year. So it is well worth checking out with your local tax authority. The second type of tax deduction that you should make sure that you are taking into account are subscriptions and software expenses that help you in creating your videos and also with doing your research. So for example, if you need Adobe Premiere Pro to create your videos, you can deduct the expenses for paying for that. And also maybe if you have a subscription to something like the Financial Times to do your research, then you can also use that as a deduction against your tax bill. It might be worth you sitting down and writing down all of the different types of expenses that you might have in creating your videos. So there might be ones you didn't even think of, such as maybe if you have a Spotify subscription that you use to listen to different podcasts to help you with your research. That would be one that you might be just thinking that you have as a personal expense, but maybe you can apportion some of it towards your business costs. Number 3 on the list of deductibles are electricity costs and internet costs. Most content creators work from home and they often have a little designated area in the house that you use for making your videos. Well, if you are working from home, make sure to deduct a portion of your electricity bill. You won't be able to deduct the full amount, however, but you can, for example, make a reasonable estimate. Say your recording space takes up maybe 10 to 20% of the area of your house. So you can claim 10 to 20% of this electricity bill as a tax deductible. Similarly, with your home internet costs, make sure and try and apportion your usage between personal and business, and then you will be able to claim that business element as a tax deductible. Before I move on and talk about a few more tax deductibles, make sure and hit that like button and subscribe to the channel. Most of you guys are content creators, so you know the deal. Number 4 that I have here on my list is your phone bill. You may be thinking to yourself, oh, I never use my phone for business calls at all. But your phone bills do not just cover calls anymore. It also covers your data usage. You probably use your phone regularly for replying to comments, replying to emails, checking your stats and doing some research. So again, you can reasonably estimate your personal versus business use and then claim that business portion as a tax deductible. Next on the list are travel expenses. And no, this doesn't mean that you can just jet off tomorrow to Greece and claim the full trip back as a tax deduction. The trip needs to be for business purposes. But let's say you had to drive to a location to shoot a video, then you can claim your mileage expenses and lunch depending on how long you've actually gone away for. Again, you should check out your local tax authority's website they will have some flat rates that you can use to claim per kilometer or per mile that you're traveling, and a flat rate that you will be allowed to claim for your lunch or your dinner expenses for the day. It's very important that you keep good records though, what dates you were traveling, how far you traveled, who you met, what you did, so you don't have any questions to answer in the future. Even if you do travel abroad to record a video, you will definitely be able to claim some of those expenses back. But obviously if you're going to shoot a video and you just take one day to shoot the video and stay on for another 6 days, you won't be able to claim the whole trip. You'll just be able to claim any expenses that relate to the actual business part of your trip. Next on the list of tax deductibles are pension contributions. Let's say at the end of the year you've taken away all of your expenses and you still owe some tax. What options may you have to reduce this tax bill further? In many countries you can get a tax deduction for making a contribution to your pension. For example, if you make a €100 contribution towards your pension in Ireland, you will get a tax credit of up to €41 per €100 that you have contributed. So this is a really tax efficient way of increasing your pension size and also reducing your tax bill at the same time. So again, check out your own specific rules in the country that you are a tax resident. More than likely you will also have some similar system. Some other tax deductibles that you should also be including are the likes of your accounting and legal expenses, or any bank charges or processing fees, for example on PayPal or something like that. You should also include them as tax deductions. What about things like clothing? Can you deduct the clothes you wear in your videos as expenses from your business? Well, it's probably a bit of a grey area here. If you have some specific merchandise that you're kind of pushing on your audience, where you have your own brand or something and you're wearing your own t-shirts, I think that would be something that you can use as a tax deduction. But if you're just using your regular clothes in your videos, or you can't be claiming expenses for your shoes that you're not even appearing in the video. So be careful around that one and only deduct legitimate business expenses. So that's pretty much all I have for you today, guys. Thanks very much for watching. If you have any thoughts or comments or any experiences that you have had yourself, make sure and let me know down below. Thanks very much again, and I'll talk to you guys again soon.